Friends, I'm going to talk to you about how we should be using the chaos in Europe as an opportunity in India. First, let's understand what's happening in Europe. We had the crisis in Greece where the Greek Prime Minister was forced to resign, and now they're moving ahead with a bailout. Italy is going the same way. Every mess will inevitably have a cleanup. Why did this mess happen? This mess happened because nations ran themselves into a corner by being financially indisciplined. Every mess will have to have a cleanup, but the people who created a mess will not be normally part of the cleanup. So you will have prime ministers resigning, having new governments formed with both the ruling party and the opposition, what is euphemistically called as national governments. And then there will be the return to discipline. The return to discipline is normally a painful process because countries will have to agree to spend much less than they did earlier. They will find it difficult to find debt from other nations, so they will lean on their nations who are their neighbors to lend to them so that they could spend. When nations are able to spend less, you will find that their growth will either halt or even turn into the negative. It is this fear that is sending the global stock markets into turmoil. What does this mean to India? Where are we in this picture? India is also spending more than it earns. We are not only spending more than we earn, we are also spending in foreign exchange. Typically, we need $250 million every single day. That is the amount India is spending over and above the foreign exchange it earns. Now that explains why the rupee is at 50 to a dollar. So India will have to find a way of reducing its dollar spending. Its imports and exports will have to be balanced in a better way. The government spending in India, which is running into lakhs of crores in excess of its income, is not snowballing into a number as you find in Europe. We are still in early days in terms of heading into any crisis of the kind that Europe is facing. That essentially means that we have an opportunity to correct the mismatch. How will this mismatch get corrected? This mismatch can get corrected by a commodity crash, because India is principally importing oil and other commodities, and any crash in the commodity market will reduce our need for dollars. Another thing that could possibly happen is that we could gradually raise our exports over a period of time. Now, we are not going to have a quick fix solution on the export front because the countries to which we export are themselves in bad shape, and any revival is not going to happen too soon. Therefore, we would possibly see a situation where our forex scenario will be stretched for a brief period of time. The good news is that inflation may reduce in the coming months because of the base effect. Essentially, the high inflation recent months is attributable to the base that prevailed 1 year ago, because inflation is measured year on year. If inflation reduces in the coming months, you will see the interest rates gradually going down sometime in the middle of next year. That would mean a change in the sentiment in the stock market. Now, between now and that point of time when interest rates reverse, we could see some panic. This panic is not unusual. These phases of panic always happen when the interest rate cycle reverses. Investors should learn to deal with this panic calmly and manage their investments by making sensible choices in this scenario. One worry which the government will address going forward is the lack of investment. This whole crisis in the infrastructure sector that we are seeing is merely because there has been a lack of investment in India. This lack of investment is showing in the weak order books of the capital goods sector. Now the government will have to kickstart investment, and that requires a vibrant stock market. And in this connection, I expect that the next budget should be closely watched for policy action. Policy action will continue to be central to the change in the stock market move. At this point in time, when we talk about policy action being central to a change in the mood of the stock market, I can understand that there will be an air of disbelief. We are almost in a policy stalemate. But essentially, that is the time. It is that nadir from where change happens. Now, what are these policy changes that look interesting going forward? One, of course, is the potential for the interest rate cycle to change. But that is in the hands of the RBI. And the data will be closely watched in the coming months. There is an inkling that the RBI has given that they may not resort to any more changes, and that's a very big positive on the policy front. Another interesting thing happening on the policy front relates to the disinvestment policy of the government. In disinvestment, the government was selling its shares to the public. Now, the government is turning the disinvestment idea on its head because the public appetite for the stock market is definitely weak. Now, the government's response is an interesting thing. What we find is the PSU's valuations are very attractive, and despite the fact that these are all cash-rich companies. So the government is mooting the idea of the companies themselves participating in the disinvestment process. What does this mean? The companies will buy back the government's stake in them using the free cash. What this would essentially mean is that the float will increase and the equity will reduce. By the float, I mean that the public shareholding in these companies will increase, the government shareholding will reduce, and the overall equity capital of these companies will reduce. Now, this is very interesting because when the equity capital of companies reduce, you will find that earnings in the following period will increase. This would mean that the valuations of these companies after the buyback will look even more attractive than they did before the buyback. Now, this initiative does not need to wait for the budget, and it's quite likely that between November and February we could see a few of these decisions implemented. Earlier, the government would take dividends from the companies in order to increase its revenues from the PSUs. I believe that buyback is a better weapon, a better instrument in the hands of the government to improve shareholder value. Now, these are all some of the interesting things that are happening on the policy front. We could see a few more. Now, let me mention one thing on the policy front that could change all these things for the worse, and that is the food security bill. In my view, this is an ill-thought venture done by the UPA in order to indulge in vote bank politics. Now, that could really alter the finances of the government. So, if we do not have a food security bill in the near term, and if we do have policy changes like buybacks by PSUs and other things through budgetary process, we could see the sentiment on the stock market changing in the first half of next year. It is that change in sentiment which investors must play for. Thank you.